welcome to the Market Insights Overview, May 2020 edition. Real quick introduction, my name is Goran Ognjenovic. I'm the founder and chief investment advisor for Independent Investment Advisors. We're an independent wealth management firm located in Portland, Oregon. We focus on investment portfolio management, financial planning, and financial advice. So a couple of things. I had to change the agenda a little bit. What used to be one video is now three distinct videos. The one video was getting a little long. It was 45 minutes or so, and so I decided to break these up into three. And the three are review economic indicators, which is this particular video, and then review portfolio performance. We have a sample set of portfolio that we're tracking every month, and then review market indexes or market action. The latter two are going to be in another video, so please go to the Market Insights blog to check those out. Before I move any forward, standard disclaimer here. The following commentary are to be used solely as educational tools, should not be construed to contain investment advice. Investment advice needs to be tailored to a specific investor's needs. None of the information in the Market Insights blog should be construed to be investment advice. Individuals wishing to tailor a plan to their own needs should seek the advice of a registered investment advisor. And then there's a high degree of risk in investing and trading. Independent investment advisors assumes no responsibility, and then we may or may not directly or indirectly maintain positions in securities and derivatives that we mentioned in these comments. All right, so moving on here, general comments. I'm going to, as we move forward here, I'm going to sort of put a grade to what economic indicators look like, and really the grading is going to be just okay, good, or great. So kind of a really high level look at things. For May, I'm going to refrain from doing that, and that primarily has to do with COVID-19. All the numbers are extremely skewed. We're going to probably have to wait 4, 5, 6 months until this data normalizes, and then we're going to have to look at where numbers are, and then they will sort of reformat the economic backdrop. So how do I use this data? I primarily keep track of market reactions as the data is released, right? So we use it to understand the backdrop of the investment climate, and then how does market react to good news, how does market react to bad news, and then based on that we will generally change our allocation ratios, right, from fixed income to equities and vice versa. In terms of takeaways for May, markets have just completely ignored any negative news, right? Negative economic data was received as sort of a ho-hum, no big deal. And then any optimism, even very, very sort of faint optimism, markets have rallied on that. So I think that has to do with, Federal Reserve coming in March and basically saying we will do anything to support the economy. So there's an enormous amount of liquidity being injected in the U.S. economy. So all that said, I think some of these numbers are going to be really out of whack and not going to mean much, but there are a couple of points I want to make. So why don't I just jump into this, right? So the first indicator I like to look at is inflation rate. And this one is troubling a little bit, right? And so the inflation rate really shouldn't have been affected by what's necessarily going on. So my fear here is if we have deflation, we're going to have, that could be real problematic for us, right? Because on one hand, you have enormous amount of liquidity being injected, so there's a lot of cash floating around, and all of a sudden, if there's no demand for goods and services, that's not going to be good. So I'm going to keep an eye on this as we move forward here. But this particular one is the one that has got me scratching my head a little bit. So we'll see what happens as we get out of COVID-19 situation here. The next one is U.S. unemployment rate. As you can imagine, with everything that's going on, it's gone through the roof. What I would like to see is, let's say we're back in September, October. I would like to see these numbers sort of settle in somewhere around here. That I think settle and pull back and then stabilize around that level. I think that will create a pretty good backdrop for moving forward. Labor force participation rate, similar kind of thing, right? Numbers are way out of whack because of COVID-19, so not a ton to talk about on this one. GDP growth rate, same, right? Going to be out of whack. I'm going to look for a stabilization around 2% as we get out of the COVID situation. Another thing that I talked about in one of my previous videos is elections, right? We got election coming up in November, so quite a bit of unknowns here from an economic perspective. So I think from a portfolio management point of view, I'm going to look to make minimal changes probably over the next 4 or 5 months, and then once the numbers stabilize, we'll reassess then. Wages and growth, wages and salaries growth. And I was troubled by this one even before all of this, right? Because it's been on a constant decline, and you would expect it to move with the economy prior to all the COVID stuff. So more of the same story. We'll have to keep an eye on it and reassess kind of in a Q4. Consumer sentiment, as you'd expect, right? This is a Michigan. This is a survey type indicator, right? It's conducted by University of Michigan. Obviously, things were running pretty good, and then COVID came along. So we'll have to see where that goes. Housing starts, or not housing starts, I'm sorry, the house price index, month over month change. So this is actually quite positive. We've seen increase, about a 1% increase in cost of housing, right? Compared to year over year. And so even with everything that's going on, right, there's a demand for houses and the prices are going up, so that's good news. I'm not tracking it here, but another indicator was new home sales, right? Not existing home sales, but new home sales numbers in May came up way above expectations. I think it was something like analysts expected 400,000 ish, and I think the numbers came in at 600,000 ish. So very, very positive news on the housing front. I think that has to do with extremely low rates, right? The rates were already low, and then Fed went and dropped rates some more. So I think these are going to continue to support the economy as we move forward. All right, that's all I have for this edition. I mean, a really quick run through. Not a lot to talk about. COVID is skewing the numbers, so we'll just keep an eye on it and then adjust as we need to, as in Q3 and Q4. All right, if you guys have any questions, just drop me an email, and I'll do my best to circle back and respond. Talk to you soon. Have a great day.